Welcome back, guys. It's time for a weekly check-in, and as usual, we are going to look at crude oil, uranium, copper, and wheat. And this is something that I do every week because we have positions in it. Anyway, let's start with crude oil, and as you probably know, it has been going up this week. And we have some very interesting developments that is about to happen very soon. And as you probably know, we have the G7 and the United States. They plan a cap on the prices, on the oil prices for Russia. And in the 5th of December, which is just in a month, basically they're going to cap all of the sales on the seaborne oil shipments from Russia. And in just a few months later, they're going to cap on the 5th of February, they're just going to cap all of the oil. This basically means that G7 and United States are going out on the world market and saying, well, this is the price, and you are not allowed to pay more for Russian oil. Obviously, this is something that Russia doesn't like. And how is G7 going to do this? Well, they're going to do this with the help of the insurance on the ships in order to move the oil. You need ships, and in order for ships to enter ports, they basically need insurance. And most of the insurance is done in the Western companies, and this is how they're going to do it. So if they see that someone is not following this cap, they're just not going to insure the ship, which will then basically nobody's going to want this. Nobody's going to want to accept the ship in the port, because if something happens, well, who's going to pay for it? No insurance, nobody's going to pay. And this unprecedented price cap, it aims to block Russia from profiting from the high oil prices because of the Russia's invasion in the Ukraine. But this also allows that most of the Russian oil will continue flowing to the global energy market. So this is a little bit of a pickle for Russia because they can't just shut off the oil. They need to sell it, because if you shut off the oil, that's going to set you back a lot of years later. You can't just shut it off and on. Once the oil is off, it's gonna take a lot of years to reopen it. And this is why it's very important for Russia to move all of its oil, because you can just store so much before you need to do something with it. Now, the G7 officials believe that the plan will work because the basically London-based International Group of Protection insure about 95 of the global oil shipping fleet. And the level of price cap that is being talked about is around $60, 63, $64 per barrel, and that is the upper limit, basically a natural upper limit for this for Russian oil. And of course, Russia's going to fight back, most likely. And it is estimated up to 80 to 90% of Russian oil will continue to flow outside of this cap, which is interesting. And if you think about it, Russia exported over 7 million barrels in September. So that is about between 1 and 2 million barrels per day of Russia's crude and refined products that could be shut in. And of course, that could pose financial technical difficulties for Russia, but it would also deprive the world of 1 to 2% of its global supply. And that is not good, obviously. And this is what we are. I'm guessing that this is what we are starting to see on the charts, and I will show you in just a second. But of course, those 80 to 90%, the United States is aware of. Some ships are actually starting to change their countries of origin, and trading entities being moved beyond the G7 in order to evade this plan, which is interesting. So it's unprecedented and very interesting situation in the oil market. Um, with that said, let's have a look at the chart. Let's see what's happening. Um, as you probably remember, if you're following the channel, we are in a short position, so this is not good news for us. And we entered first position here. That's almost a year ago, and the second position at the end of the summer. And since then, it's been going with us. But then OPEC Plus came in and capped the production, starting to manipulate the price. And since then, we have gone up, continued down, and let me just zoom in. And the last week or two, we continued up. We are actually starting to break this resistance cloud, and I believe that this move is in preparation for the uncertainty of what will happen once this price cap is announced officially and starts to act in the 5th of December. And this does make me nervous. I mean, we've broken the cloud, which and we are just sniffing at this lower high. This is where we closed last Friday. I mean, if we continue more, I'm just gonna throw the towel and just exit this. What I want to see next week is at least some sideways action, because if we continue up, um, let's see how far we are expected to continue. What's this? Well, there we go. This move could continue between $100 and $105 before we can expect a new retracement. And once we get that and we don't go below the cloud again, that's probably what I'm just gonna abandon this short position. I'm just gonna take my gains that I have from the previous entry and just no. This market right now is just way too manipulated by the OPEC Plus, by this price cap. It's just unprecedented, and it's not normal moves in this market right now. So anyway, that was oil. It is a difficult position to be in. It's not a normal position because once this price cap is in position, what is going to happen? I mean, if the world looks at it and says that India and China and see a perfect possibility for them to buy oil cheap, and they're going to say that yes, we stand behind this and we are not going to pay more than $63, $64 or whatever the price cap will be for this oil, take it or leave it, and Russia takes it because they can't just shut down their production. Well, then we are in a very good position because this will just probably drop like a stone. However, we have the other side of that coin, and it's if the rest of the market says no, we don't care. We're just going to buy from Russia, continue buying from Russia, and at the same time, Russia starts to punish the G7 countries by not selling to them. That will put pressure on the rest of the market. And well, as you know, lower supply means higher prices. And the demand is, yes, it is getting lower, as you can see before they started to play around with this price and the politics. The world isn't starting to get into a recession, so the price should go down. But it's just too much politics right now. All right, that said, let's leave oil at that and continue moving. In next position is uranium. That is interesting for us, and I just recently made a video about uranium. Yeah, I'm gonna put a link here above, so please check it out. Just gonna do this because that position is not closed yet. There we go. So check out that video. I talk a little bit about uranium. I talk about this position. I talk about the SMRs, which is small modular reactors, and also a little bit about thorium. But I'm not invested in thorium. That is something for the future, maybe. But uranium, yes, we are very much invested in uranium. This is where we entered a position, and now we have a beautiful supportive cloud, and we have beautiful higher highs, higher lows, and this is just continuing right as it's supposed to continue, up and above. And the target is up here at 90, 20, between, well, $19 and $23. So there's actually not much to say about uranium. Uranium is going very good. So let's jump to copper, and we have this massive move. Hopefully, as you remember, now we have had copper moving against us for quite a while. But it's been going sideways basically. Now Friday we had this massive move. But as you remember, we are not looking at the daily chart on the copper. That is completely uninteresting for us. We are looking at the monthly. And do you remember what we talked about the monthly? Every single week we were saying we are at the cloud. We had this massive drop, we have the slowdown, and now we are looking to resume this next extension. And this is right as of today. This is looking just beautiful. This is like a dream come true. It is doing exactly as it's supposed to. We have this retracement onto our target. We have slowed down, and we are starting to have reversal. Again, please remember that these are monthly, so this is a very long play. This is the slow play and the long play, and the world markets needs to basically recover before we continue up. So we could expect some more side action before that happens. And of course, lastly, we have the wheat, and there we go. Let's just go back to the daily chart on the wheat. Let's just zoom in. We were rather early. We are still in this position. This is where we entered. Then we had this move, and we are slowly moving away from this massive resistance cloud, and we are building a supportive cloud. The retracement is still within reason, so it's still normal for us. There's no need to panic, and as you can see, the cloud is starting to change. So what we would like to see now in the upcoming weeks is that it could continue sideways for a little bit more, but it should also start moving away, and we want to set this a new higher high in order to be completely comfortable with the continuation of this trade. So as of now, it's moving sideways basically. So, but the signs are still there. It's still with us. So this is not running away from us. So let's just wait and see what happens next week. All right, guys. Hopefully you found this useful, and I will hear from you soon. Cheers.